We'll start by looking at the growth picture first. So revisiting the growth outlooks across the global economy, as well as for major markets. What's new, what's different, has anything changed, and what does that mean for opportunities in 2024? We will then talk about inflation. We're getting a lot of questions from executives, especially as it relates to shipping disruption. So we'll go deeper into that topic. We'll then talk a little bit about the outlook for credit costs and interest rates. Of course, politics looms very large this year, so we'll cover a couple of things related to political risks and some updated information we have to share. And then we'll do a brief view of our events to watch, which is looking at outside of the base case, what type of disruptive events could be affecting businesses in the course of this year. We will have time for Q&A. Feel free to drop a question throughout. If you think of anything, let us know, and we'll be more than happy to spend a few minutes at the end answering your questions and engaging in dialogue. And as I mentioned, we will be doing benchmarking. That will be anonymized, but you'll be able to see the results right away. So it can be quite helpful in getting a sense of where your business is compared to others. All of the materials that we're presenting today will be available on the Frontier View portal. They will also be shared. Any of your colleagues who are not able to attend, we will get the recording, and that would include the polling results as well, in case you find those interesting and helpful to share across your teams. So with that, let's go right into it and start talking a little bit about the global growth outlook. 2023 was a year of upside surprises in many ways. I think going into it, say 12 months ago, this time last year, companies were still quite pessimistic about what was going to happen. I think one of the main factors that surprised was, one, the resilience of the US economy in particular. Of course, China's reopening and lifting of COVID restrictions back in December 2022 was a big surprise as well. And even though growth has disappointed there, it was still much better than it would have been if China was still under COVID lockdowns. And we've seen some resilience across consumers around a number of other markets as well. We've also seen, you could argue, a slower transmission mechanism of higher interest rates on growth than originally anticipated. So as rates have increased significantly, that hasn't immediately caused a significant crash in terms of corporate debt, consumer debt. Yes, we've seen pressures on real estate markets, on housing markets. We have seen pressures in terms of funding costs for businesses. It has definitely had an effect, but it hasn't been as fast and dramatic as it could have been. And I think that lagging effect is going to be important for how we think about 2024 and what the drops in interest rates could look like during the course of this year. So our assumptions for 2024 are that we will see a slight slowdown in growth relative to this outperformance from last year. No big deceleration expected. We're not expecting to see any significant downside surprises, although you never know with these things. And at the same time, some of the slowdowns are happening in a few major markets, but they're not across the board. And you'll see an illustration of that in a minute. Second, on inflation, inflation has definitely peaked. We will have a conversation about risks to that story, but broadly, we have seen inflation peaking and starting to come down, and we expect that process to continue during the course of 2024. And similarly, interest rates have also mostly peaked and will start to come down as the year progresses. That ripple effect in the opposite direction is probably going to also be slow. So I think we will still be living very much in a world of high credit costs during the course of the year, but moving in the right direction, which can be important for confidence and future investment costs as well. We will also be living in a world of significant geopolitical risk. That isn't going anywhere, and it's not even just the elections that we expect, but of course, issues around the war in Ukraine, the Israel-Hamas war, as well as uncertainty around policy on a number of areas. So that will be a source of volatility and policy unpredictability that businesses will have to navigate during the course of the year. To illustrate that with some data, you can see here our expectations for global growth in 2024. I've noted here as well 2025. So I think it's important to know the curve of this thing. So we've obviously seen a sharp slowdown following the invasion of Ukraine by Russia. Last year was better than expected, but still a bit of a slowdown that continues into 24. But there are many reasons to expect a bit of a rebound into 2025. First and foremost of which is certainly by then quite a bit lower credit costs than where we are today. And inflation should be well behind us at this point as well. So as you think about this year, think of it also as a prelude to 2025, which should really feel like a recovery year. Looking geographically, you will note that there are a number of emerging markets that will continue to have strong growth, whether you're looking at India, parts of Southeast Asia, parts of Africa, and to an extent the Middle East, even amongst the Latin markets as well. Maybe not spectacular growth, but certainly relatively solid performance. The US will slow, China will slow. Those are the two big drivers of that slowdown. And just to illustrate that a little bit more specifically, you can see here just an illustration of markets that are going to perform better than last year or worse than last year. On the right-hand side are the ones that will perform worse. And that list is maybe short-ish, but actually quite significant. So here you have the US with a significant slowdown, and Anton will walk us through that. You see markets like Canada similarly being affected. Also importantly, of course, China is on that list, as well as markets like Japan, Australia, Brazil, and Mexico. So it's a short list, but it's an important list from a geographical perspective. Outperformance, we're seeing some of that across Southeast Asia, which as interest rates come down, we'll start to see a little bit more of a boost. And of course, manufacturing localization is full steam ahead there. Some markets in Central Europe as well will start to see a bit of a pickup. So the emerging markets picture looks actually quite attractive in a number of different ways. And that's an important message when we think about more depressed areas of growth like Europe, for example, which remains improving, but from a very, very, very low base.